Our next guest has two of his own high dividend stocks that he thinks are heading for a breakout. More on the markets as well as those stocks that go off the charts with Rob Sluymer of Fundstrat. Hey, Rob.
Hey, Melissa. So let's start with the S&P. We'll look at the 10-year bond yield, and then we'll look at a couple of ideas. So if we start with the S&P, and we look at this indicator in the bottom panel, it's a proprietary indicator we have, and it tracks the percentage of stocks with rising weekly momentum. So how many stocks are moving up on a weekly chart? And if we go back to 2016, because we still think that's an analogy, when that indicator got above 90%, it's a relatively rare reading. It tends to happen around major cycle lows, so we'll call that a good overbought. Market is still early on in a bull cycle, but it's heading for a pause. In fact, if we look at what happened as we came off those levels at the end of the first quarter of 2016 into the beginning of the second quarter, we really went sideways for 2, 3, 4 months. So we think that there's a similar setup developing here. Coming into the end of last week, it was at 92%. The market's getting a little bit extended, at least from a tactical standpoint. We're still bullish long term. We want to be buying any sort of pause and accumulation or distribution that develops over the next couple of months. But we think we're heading for a pause. So this data looks very similar to 2016. We think as we move into the second quarter, as a lot of these stocks get superheated, growth stocks, semiconductors and whatnot, we're going to be wanting to get a little bit more into defensive names just as a tactical multi-month trade. So let's take a look at the 10-year bond yield. It's obviously come down a long way. There's two things here. One is this momentum indicator in the bottom panel, just a simple RSI looking at a 14-week. It's starting to get oversold. And while this chart here, this line at the top, is the downtrend that goes all the way back to the beginning of the 1980 highs, and that's where the market stalled in 2007, and that's where the market stalled in at the end of 2018. So what do we do here? It's a little bit tough to see, but in this band here between, call it 250 and 2%, sort of in the middle of that band, 2.25 to 250, we don't think there's tremendous amount of downside in bond yields, particularly given this momentum indicator, this weekly indicator that tends to track multi-week moves, is getting oversold. So while the equity market's red hot, we've got, again, growth stocks working, we've got semis working. What do? I'm going to come back to a name we've talked about before, because I think as you go into the second quarter, these names that have been pushed down, that have been avoided as the growth stocks have rallied, are going to be pretty timely. And I just think that Pfizer coming right back to the 200-day as we get into the second quarter is going to be a timely place to be. It's lagged considerably, so if we're going to get any rotation as we get to the end of the quarter, I think that's one name to take a look at. And then Verizon is sort of a controversial name. But again, it's just coming off that 200-week moving average or 200-day moving average, and that relative strength is starting to firm. You got a 4% dividend on Verizon. You got a 3.4% dividend on Pfizer. I think those are great names for a few months in the second quarter.
All right, Rob, why don't you come on over?
Bring him in. Shoot him, right?
Evan will bring the chair in.
Because if you shoot, that's the good thing.
That's right.
You're hunting him.
Thank you, Evan.
Shoot him.
All right.
You'd be great for that game.
Before we get more into some of your dividend stocks, Rob, I want to go back to the chart of the 10-year yield where you showed the RSI and you showed that it was looking oversold. Does that imply that you think yields are going to go higher? And would the growth trade in your mind be in jeopardy if rates do go higher?
I think that there's going to be a lot of churn as we get into the second quarter. Yields have been falling. The market's been going higher. I think that weekly data suggests yields aren't going meaningfully lower. I don't think we're going to have rates going down below 2%. That's my view based on what I see on the chart. And then we get into this churn period. As that starts to happen, I think a lot of the growth stocks are due for a pause. They've just run a long way. If you look at software names, Adobe we saw last week begin to churn around. We saw Nike today after hours. A name like Keys, for example, a 5G play, has just been red hot and screaming. Those stocks I think are going to get set for a pause, some sort of pullback. There's risk for some earnings disappointment going into the second quarter.
So does that mean that you think the S&P 500 won't recapture its previous record?
I think it's going to churn for a couple of months before it accelerates in the second half of the year.
Yeah, so Robert, if you look at the Treasury yield curve and you look at the parts that actually have not moved as much, do you think that there's some sense that the yield curve could actually strengthen again if the Fed comes back into play? But back to what does that mean for the overall market? Would that change your view on anything here?
My guess is the curve, it's going to take some time before it starts steepening again. I'm sort of speculating. We don't have any evidence of that technically yet. So I think as we move into the second half of the year, a lot of our concerns about the economy slowing down, earnings slowing down, that's all going to get reflected in the stocks. And the curve starts steepening. You're actually probably going to go back to more cyclical names.
Like banks.
And even the banks. But that's in the back half of the year. We still got to get through this churn period. And all the growth stocks are setting up for a little bit of pause from what I can see technically.
Now, Rob, I know that you came early to the show, so I don't know if you were listening very closely. Did you listen to the rules of the game that we were playing?
Oh, yes.
Okay, because we want to give you a bonus round.
Come on.
There we go. Let's go.
Yeah, Rob Sluymer with
he's
the
gonna do a
bonus
much better
round
job.
at the end of the desk. AT&T, hunt it or let it fly.
I guess if I'm going with Verizon, I got to go with AT&T, so I'm gonna hunt it.
You're going to
Nice.
hunt it.
Nice. Well done.
Do the technicals line up with what you're seeing with Verizon?
You know what? It's deeply oversold. It doesn't look as good as Verizon, in my opinion. But if I have to pick those names over some of the high growth stocks for the next 2 months, I'll take AT&T.
All right, Rob, thank you.
Thank you.
Thanks for playing the game.
Playing so well, by the way.
Accurate.
So competently compared to some of the other people here on this desk.
Phenomenal.
Rob Sluymer of Fundstrat. Pete, I'll go right back to you because Rob likes both of those. You didn't like AT&T. Would you
No.
like Verizon instead?
No, neither of them. No,
Okay.
I just hate the leverage there. But going back to his Pfizer call, I love that one. I'm in that stock. You got a 3.4% dividend yield out of there. You'll have 13 times. Everything fundamentally lines up as well.